I am recording this video for the clients of Pruitt-Hamm Law and Mediation Services to explain what we refer to as the Statement of Assets and Liabilities. This is on a spreadsheet, and we refer to this particular spreadsheet as the Becker spreadsheet because it was first developed by Doug Becker, who is the founder of the Domestic Relations Association, or Domestic Relations Attorneys of Washington, the state bar association for family law attorneys, and is widely used particularly in the King County area. So what do we got? We're showing you the screen share. This is obviously going to be a sample case, but how does this work? We insert figures into the white cells, but the green cells all have formulas, so you will not put anything in there. Now typically the presumption is that all of the assets and all of the debts of a married couple, or of either of them, will be listed and inventoried. And then the total community property equity will be split 50-50. Separate property of the husband would go to husband, separate property of the wife would go to the wife. So this spreadsheet helps to organize what amounts to the 5 steps of property distribution, which are described on our website, and we can also provide that to you. The first step is to list all of the items of any significant value, and that would be financial value or emotional value. So for example, a pet could go on the spreadsheet, but it might have no value to anybody else. So we'll just put it as a $1 bookmark, and then we have to say, well, is it distributed to somebody? Anyway, first step, list them all. So under column B, you would list everything that's of value, including debts. Step 2, you would provide a value, and the date of valuation, it's going to be a snapshot in time. For a bank account, that's going to be your most recent bank statement, would show the statement balance at that particular date. What we tend to recommend is using this date of value in column C and use the date of separation or as close to it as you can get. We'll talk about alternatives to that with you privately. Then you would insert the gross value. So the third step, first step, inventory or itemize. Second step, value. Third step is to characterize. Now what is characterize? This is the only step where you really would want the help of a lawyer. And so for that purpose, we've got these shaded sections. The community property, you think of 3 buckets: the community property or common pot, a his pot, separate property of the husband, and a hers pot, separate property of the wife. All of the community property, if it's characterized that way, it would go into a red shaded cell, either to be distributed to the husband or to the wife. And here, for example, we have a house with $550,000 of gross value, $320,000 of debt value, meaning that the net value is $230,000. Well, let's say that the husband had made a $20,000 contribution out of separate property funds. That $20,000 would be distributed back to him, and the remainder would be community property, and if it's all being distributed to the wife, that would go under the community property section. So that's step number 3, is to characterize. The fourth is distribute, or distribution. And by putting the values into one of these 4 columns, you are distributing the value. Now the final step is equalize. Equalization is accomplished here at this spot of marital lien. If you notice, all of the assets and all of the debts get a net value for the marriage, but only some of that is community property. There's $181,000 of separate property, so there's about $800,000 of community property. In this distribution, the husband is getting this $621,000 of community equity, and the wife is getting the other $200,000 of community equity. In order to get to a 50-50 split, there has to be a transfer of half of the difference from the husband as a negative amount to the wife as a positive amount. So 621 minus 211 equals 409, 197 plus 211 equals 409, and each party is getting 50%. Now let's say that you say, well, the wife should be getting more like 55%, what we would call a disproportionate distribution. You'd plug that in here. If you say, oh, the wife should be getting less, the husband should be getting more, you plug it in, and this green one self-computes, and these others in green also self-compute. So you can then see what would be the marital lien, or otherwise known as equity equalization payment, or EEP. Now this section down here is where we would use to make some adjustments for, say, post date of separation, that one party paid for something that really should have been paid for by the other party. There would be a reimbursement, and those we would talk with you about individually. But once you add the reimbursements and the equity equalization payment, you then get a final transfer payment, which is the marital lien or equity equalization payment from here, plus the sum of the reimbursements, and that gives you the total value. Hopefully this is helpful to you, and you can insert and list everything and then provide the valuation date and the valuation amounts. And obviously some assets like a house will have a positive value for their fair market value, and then a value for the loan that is still secured on it. So those would both be entered on the same line. A car with a car debt, same thing. Otherwise, if it's a bank account, it's simply an asset. If it's a credit card, it's simply a debt. And it would just go into one of these columns, and then the net value is computed for you. Look forward to talking with you further if you have more questions about how to fill out the statement of assets and liabilities. Thank you.